Hello and welcome to Sibos 2024 in Beijing, and we're here at the Chainlink booth. I'm Liz Lumley, and joining me today is Ryan Lovell, who is Director of Capital Markets at Chainlink, and Tim Way, Business Solutions Asia for Fireblocks. So we're going to talk about a recent announcement of a partnership between Fireblocks and Chainlink. And what was announced last month was that Chainlink was going to work with Fireblocks digital asset infrastructure to offer an end-to-end solution to financial institutions and companies that want to issue and transact with regulated stablecoins. So that's kind of that end-to-end real-time view of this market. Is this commonly available in the industry right now?
Yeah, well, first off, we're really excited about our partnership with Fireblocks. I think this is a very unique offering in the market. Currently, there's best in breed in certain specific categories, and you must individually go to those companies that service that specific area of the market. So you take industry standard security, private key infrastructure, tokenization engine from Fireblocks, and then you take the data, the interoperability, and the proof of reserve piece from Chainlink, and you combine those into one unique, cohesive offering to the market, and clients can just interact with both of us in the same commercial setting, in the same team setting. And I think this is really a game changer that isn't widely available in the market. So really excited about that.
Yeah, no, the regulated stablecoin space is really interesting. I mean, Tim, what do people need to know to get that stablecoin market correct? What do they need to do right?
So when we talk with clients, we find that they look at four main axes that they need to get right. Liquidity, utility, scalability, and control. And if you mess up one of them, then the project won't work out. So what do I mean by that? So liquidity is very much around finding a business which can be effected through the use of the stablecoin, driving higher volumes in the use of the stablecoin. We might come on to the kinds of businesses we'll talk about later. Utility is very much around making sure that there is client value in the offering from the client's point of view, not just from the issuer point of view. Business case from an issuer point of view, issuing a stablecoin is very straightforward. So really the emphasis is on making sure that there's actual client value in the use case and the business that you're offering. Scalability is obviously critically important. Businesses, institutions now are in the phase where they want to drive commercialization with digital assets. They don't want to be doing science experiments. And I think that the partnership that Ryan mentioned earlier is one example of how we aim to offer that scalable solution out of the box for businesses who want that support. And then finally, I'll touch on control, which is often what folks think about last, but it's probably the largest box in terms of effort that we find clients and prospects need to be working on. It's everything from the compliance and the regulations that maybe come to mind to begin with, right the way through internal policies, operational risk, technology risk. There is a huge gamut whereby the solution that you're introducing, or we find clients introducing into a firm, it needs to be the same level of production readiness that any other solution that would go into a bank needs to be, and it needs to tick all of those boxes. And part of the announcement that went out about proof of reserve is one of those requirements, but it's one of many requirements that we find clients need to look at.
I'm glad you mentioned scalability, because this idea of this whole market becoming more mainstream and accepted in the institutional space. I mean, going back to you, Ryan, how big a potential do stablecoins have within the institutional market?
So I think, stablecoins in general have been, the killer app when it comes to delivering real value when it comes to a business setting. And it's because blockchains are open 24/7, 365. So, cross-border payments, even payments within a single jurisdiction, are typically confined by working hours of very old, archaic systems that can only work 9 to 5. So immediately you have a way to instantly settle transactions, even within a single organization, which may be cross-jurisdictional across the globe. And I think that payments is one aspect of this, but I also think that the success of digital assets in the terms of tokenized funds, tokenized securities, is very much tied to the success of stablecoins. Because, we can take an example like a tokenized fund. Why would you issue a tokenized fund? Okay, you could enable 24/7, 365 access in and out of that fund. But if the payment leg isn't there, you're kind of not getting the full end-to-end benefits. So I think in a vacuum, just for payments, it's a massive opportunity. But what it enables as a secondary effect in the tokenized asset world is so much greater. So I just think it's just by itself a massive, improvement in innovation in architecture and how systems work. But what it enables as far as on the asset side is so much greater.
Tim, do you agree with Brian that stablecoins are kind of driving that innovation in this space?
Yeah, I mean, absolutely. And I'd add to that, if we look at the world today, about 1 in every $300 of M2 is on chain. I think we believe that's probably going to increase at least 6-fold over the next 5 years or so. And what's going to drive that, as Ryan said, is the kind of businesses that need to settle in cash. So the tokenization of real world assets is one key driver that's going to be used to get to that level of scalability and that level of innovation. If we look at what is driving stablecoins today, I don't think it's necessarily going to be the same as what's driving stablecoins tomorrow. What's got us to where we are at the moment is things like access to US dollar banking. What's going to get us to where we're going tomorrow is going to be more of the tokenization of real world assets. And also, I think we're just beginning to see now the use of stablecoins as collateral when we need to use them on derivatives exchanges and other scenarios like that, where it is cheaper and there is a greater capital efficiency by having fast moving capital that can be instantly moved between venues. So I think those businesses are the ones that are going to benefit to get us to the larger AUM in the coming years.
It's a stablecoins today, stablecoins tomorrow. Excellent. Ryan and Tim, thank you very much.
Thank you very much.
Thanks for having me.